Good morning, traders. Today's theme is pivot point. That's because the market's at a very critical juncture and we've got lots of news pending this week. So we have to see how it plays out and what the market reaction is. Before we get into market analysis, let's take a look at how the recent picks have fared. MSTR, that was the last pick that I gave you. It was Wednesday before the open. And here you can see stock kind of floundered around for Wednesday and Thursday, but it took off very nicely on Friday from 348 to 368. It's about a 20-point move. Really nice. If you waited patiently and you saw this breakout to a new high for the last 2 days, you could have gotten long somewhere around the $360 level. Still a nice $8 gain for a day trade. Remember, on the long side, we're keeping our trades very short term. We're sticking with day trades. We're only playing this bounce, knowing that a longer term market decline is setting up in the course of the next couple of weeks. So MSTR, really nice stuff. Let's take a look at two of the other highlighted stocks that I gave you last Sunday. HTZ. There, we were going to be selling out of the money $5 puts with 2 weeks left till expiration or 3 weeks left till expiration. I sold the May 9th $4.50 puts for 25 cents. That's going to yield close to a 10% return in 3 weeks. Let's look at the stock. The stock is all the way up to $8.30. So as long as the stock does not drop 50%, 50, the stock would have to be halved in the course of the next 3 weeks. If that doesn't happen, I'm going to collect my 10% return. Thank you very much. I will do trades like that all day long. And remember what the market context was a week ago when I gave you that video. Monday, the market sold off huge. Yes. In the last 3 days, we've rallied about 400 S&P points, but we didn't know that a week ago. There was so much market uncertainty and so much volatility. That's why we've been focusing on selling these naked out of the money puts on strong stocks when we have very, very high option implied volatilities. Great strategy, great way to generate income and not to have to sweat out any of these moves. I hope that many of you have taken advantage of this trading strategy. DJT, that was another one that I showed you. I didn't get that trade off because the stock took off out of the gate. It shot higher. So if you were looking for a long to trade and you had this on your radar because you're trying to sell some naked puts on it, you would have been able to catch some of this move. We'll go into the 15-minute chart and you can see this is what the stock did on Monday, and it never looked back. So from $21 to $26, that stock just kept grinding higher. Now, Thursday and Friday, the market was up. The stock has kind of hit a resistance level. No, I would not be buying it here. I would be taking gains on any long positions that I had. Again, I can't reinforce this enough. On the long side, you have to keep your trades very short term. Day trading only, looking for high volume breakouts, looking for that sustained directional movement through the course of the day. Yes, nice opportunities on the upside. We've been looking for a bounce. I'm going to get into longer term market analysis in just a second, but I want to drive home a very important point. So we're going to take a look at the price action from 2022. We had a huge market rally heading into 2022, and we had the Fed getting ready to raise interest rates like never before. Well, when that news started to get closer and closer, the market sold off in fear of what might possibly happen. Oh my gosh, higher interest rates are going to strangle the economy. So sell, sell, sell. This is the initial first drop that we got, and you can see it lasted about a month or so, and it was about a 20% drop. So after that time, what happens? We get a nice, big, tall bounce. Hey, this looks pretty dang good. We even got above the 200-day moving average. We even got above the 100-day moving average. a little retest, a little dip, and then boom, right back above that 100-day moving average. Everything is looking great, right? Hey, it's a time to get long, right? Wrong. But Pete, more than half of that drop had been retraced. Yes, that's true. We like to see half of the drop retraced. But Pete, we got above AVWAP-Q. We got above the 200-day moving average. We got above the 100-day moving average. Maybe the market's going to bounce and it's going to run all the way back up to the all-time high. That's what a lot of traders are thinking right now. That's what a lot of traders were thinking back then. Hey, the economy hasn't fallen apart yet, even with higher interest rates. Well, what's the mentality right now? Hey, the market's selling off. Tariffs bad. Sell, sell, sell. Oh my gosh, we don't know how anything's going to play out. And then you get the bounce. And the bounce is due to, well, maybe the tariffs won't be that bad after all. Well, look, earnings aren't that bad after all. Well, look, the economy is still hanging in there after all. That is what's happening right now. But here's what happened in 2022, and this is what we're setting up for now. First and foremost, what caused this decline right here? Very important point. Higher interest rates and the potential for a slowdown in economic activity. Nothing happens, nothing happens. We know off of deep drops, we get big bounces. All right, this is not where you want to get long. Oops. Look what happened. The bottom fell out and we actually made a new relative low. The Fed kept raising interest rates. Look at the next bounce. Wow! Look at the height of that bounce. Again, nothing had happened to this point. Economic conditions remained strong. The Fed continued to hike interest rates. Employment remained robust. The one thing that we had back then that we don't have right now is we had helicopter drops of money. There was so much post-COVID stimulus taking place at this time that people had lots of cash and they were spending it, and the economic deterioration hadn't materialized yet. So we get this nice big bounce, and again, you're thinking, hey, there's no second shoe to drop. Everything's okay. We're back above the 100-day moving average. You could say, well, look, we had a double bottom. Wasn't a higher low. It was a lower low, but we had a double bottom. Look at that sell-off there. Again, interest rates were moving higher, and there was still plenty of fear, and we knew that this was not a mistake. A 20% drop from the high in the course of a month was not just one great big mistake. Okay? There were problems. We simply got oversold and we bounced. And then we tested support again and we bounced. And then we really tested support all the way down to the 360 level before we started to find some meaningful support. So, and look at the size of this bounce right here. That looked really legitimate too. I remember trading that. And then look at this decline. So lots of uncertainty, lots of volatility. We should not expect that the bounce that we're seeing right now is going to be anything more than a bounce. I am telling you this. I am pounding my fist on the table. Do not get long here. Do not think that all is well and that there are no problems. Because there are. And tariffs are only grabbing the headlines right now when the bigger issues are global growth. And I've been saying that for the last 4 months. There's no growth in China. There's no growth in Europe. There's no growth in Korea. There's no growth in Japan. Where is the growth going to come from? And yes, you can throw tariff uncertainty in there. We had Google post earnings last week. You've got antitrust lawsuits with Google. You've got the same with Meta. Those are two of the big 7 tech stocks. Apple, who knows? If we're going to impose big tariffs on China, maybe they're going to go after our largest company, Apple, and impose some tariffs there. I believe about 20% of Apple's iPhone sales are generated in China. So you get this nice little double bottom, higher low. Everybody's feeling real good right now. Hey, look, we're back above 550. Maybe we're going to continue to run up. Maybe we are. And I'm okay with that. We've got lots and lots of earnings coming out this week. We have Microsoft, we have Meta. Let's take a quick look and see which stocks are going to be announcing earnings this week. And we'll go in, let me clear all this, and we will take a look at stocks that have very high option liquidity. And then we're going to go in and we're going to look for earnings coming up in the next 5 days. And this is what you should be doing, not just because of the positions that you have on, maybe those companies aren't announcing earnings, but they will have many peers that are announcing earnings, and they'll have an impact on the stocks that you're long. As we look through the list, you can see Amazon, a lot of big names. We've got Meta, we have Microsoft, we have Qualcomm, lots of big companies announcing earnings this week. We also have a ton of economic releases. The most interesting one to me is going to be posted, I believe Wednesday, GDP comes out. That is our first look at Q1 GDP. The Fed has been forecasting minus 2.3% growth. Excuse me, negative growth. So that's a big deal. That's our first quarter of negative growth. We'll see where it comes in. If it comes in at minus 1.5%, I think the market will probably like that news better than feared. If it comes in around that minus 2.5 level, I think that it's going to send a little shockwave through the market. So nothing too bad because, hey, maybe the Fed will be a little bit more anxious to ease now that they've seen that Q1 GDP growth is relatively soft. I wouldn't really count on that because Powell's already told us that he is happy with where current interest policy is. They're looking at maybe a 25 basis rate cut in June, so still a month away. So I wouldn't count on any real dovish remarks from the Fed. Every other central bank around the globe has been easing for many months. They are much more worried about economic activity decelerating than they are about the threat of possible inflation due to tariffs. So that tells you where global banks are. And when you start cutting rates and you start cutting rates and you keep doing it and you're not seeing any economic stimulus, you're not seeing any bump in economic growth, it's a slippery slope because once you start going down it, the rate cuts don't mean anything anymore. They may mean something longer term in terms of stimulating consumption, but in the short term, gosh, we keep cutting rates and we keep cutting rates and we keep cutting rates and we're not seeing the benefit of that. So just cutting interest rates, those are all little sugar highs. Those are very temporary, but you have to see that longer term benefit, which is an increase in consumption. So the bottom line to all of what I'm telling you right now is that this is a pivot point. This is a very, very important point for us to watch, for us to see how those earnings reactions pan out, and to see what the economic numbers actually look like. Once we get past this week, we'll also have the FOMC statement a week from this Wednesday. So we've got quite a bit of news compressed in this timeline. How am I trading it? What am I doing? So as you might recall, we were day trading from the short side in here. We were not long during this initial breakdown. In December, I told everybody to go to the sidelines with their bullish swing trades. I see danger coming. So we caught this early move, knowing that we don't pick market tops, but we had lots of nice little weakness. So on an intraday basis, we're able to find great opportunities. This is where we're looking to take some bearish swing trades, but we needed just another day or two up here to really be able to load up on them. And the market fell right apart and we got this gigantic sell-off in just a matter of days. Well, this is when the tariffs actually went into effect and when Trump was being very boisterous about what he's going to be doing, and he was hiking tariffs all over the place. And then this gigantic long green candle came on his comment that, hey, we're going to postpone the new tariffs. The 10% is going to be in effect, but the retaliatory tariffs we're going to be holding off on because we want to have time to negotiate those trade deals. So right now what you're hearing is, oh, we've got a lot of deals that are in the making. There have been comments that we've got a deal that's being made with China, but China says, no, we're not in any kind of discussions. We're not negotiating anything. So I don't think there's going to be anything happening there, especially when Trump says, no, they're going to have to give us something. And China's saying, we're not even interested in talking to you right now. You want to play hardball? We'll play hardball. I think Europe, Korea, Japan, different situation, they seem willing to negotiate. So we could hear of a trade deal, and that could be a positive catalyst for the market to rally a little bit higher. Again, earnings should be good right now. The tariffs have not been imposed. The tariffs have not had an impact on economic activity yet. So those numbers should be good. But it's going to be the guidance that's going to also be very important to watch for. So you get a little bit of a leak higher, a little leak higher, and then everybody starts thinking, hey, maybe the market's going to rally. This looks like a good entry point. I'm watching for a little bit of a move higher, and then to gradually start hitting resistance and start rolling over. And then when we break back below that 550 level, if we do it with a nice long red candle and some news, that would start getting me short. I would start taking bearish swing positions then. By the way, I am not a sell in May and go away kind of guy. Okay, that seasonality pattern, in my experience, has not played out. It's a cute little rhyme, but this time I'm looking at what the backdrop is, and I'm looking at this as only a bounce, and I believe that the tariff news is going to come and go over the course of the next month to 2 months, and then all the deals will be struck, and the reality of the tariffs is actually going to start to set in. You're going to see some supply disruptions. You're going to see some higher costs to the consumer. We'll also, hopefully by then, have some idea if the budget is going to get passed. That's got some nice tax cuts in it, so that could stimulate consumption. In general, where is the growth going to come from? That is my biggest concern for the market right now. And it hasn't just been a market decline. We've seen bond markets going crazy globally. We've seen the US dollar tank. There are issues, okay? This is not all just going to go away. So be patient. Let's let this bounce, run its course. Let's watch for signs of resistance, especially as we start getting up to, I don't think we're going to get up to the 100-day moving average. Maybe we get to the 50-day moving average, but you'll also notice that the 50-day moving average has crossed the 200-day moving average. That is a death cross. That tells me that we are in a bearish cycle right now. So I am focused on the short side. I'm just not taking any short positions until I see the rest of this bounce, and I want to see signs of resistance. I want to see the market starting to roll over. I believe that once earnings season has passed, at least for the mega cap tech stocks, that shorts are going to be emboldened. They won't have to worry about being short and getting caught on the short side when mega cap tech stocks are reporting. And those have been the companies that have been driving the market higher. So if you're looking to short, you want to get those 7 tech stocks out of the way, and then you'll feel pretty good that if the market's not able to advance any further, that you can start gradually scaling into some short positions. It's exactly what I'm looking to do. So that's your market forecast. I'm looking for a little bit higher move in here, maybe resistance around the 50-day moving average. So yes, if you're trading, You're going to find more opportunities on the long side right now because of this big bounce. And there's the big bounce that I had mentioned earlier. You came in Monday and you saw this drop, and we were all the way down to 508 on SPY. And you're thinking, uh-oh, we're going to test the low and we might even take it out. I mean, that's the mindset Monday. What were we doing? In here, I was telling you, take gains on your bearish positions. This is a nice drop. Option implied volatilities are sky high. We don't need to catch the bottom. Take profits because a bounce is coming. All right, so I was a day early. If you stayed too long and you had to weather that long green bar, you were not happy with yourself. And in here, I was telling you, let's sell some out of the money naked puts on strong stocks. A bounce is coming. What a great strategy. We've been able to generate money while the market is all over the damn place. And now I'm telling you, be sidelined with your swing trades. Don't be selling any out of the money naked puts right now. Let's let this little last leg of the bounce play out, and let's see how high we go. What would I not want to see given my longer term bearish market bias? How will I know that that bias is wrong? Well, if we scream up to the 200-day moving average with 3 or 4 nice stacked green candles, okay, I'm not shorting. I understand buyers are back in control. They look good. Am I going to change my longer term thesis based on that price movement? No, I'm going to need to see some improvement in global economic conditions because that is the concern. It is not tariffs. It is that global economic slowdown that has me worried. So yes, if we march right up to the 200-day moving average and through it, obviously, I'm not going to be so bearish anymore. Then I'm going to be really watching to see if the market can pull back and make another higher low. Okay, it did. Buyers seemed aggressive when they came in. All right, I have no problem shifting to the long side. It's just that I know this move right here was not all just our imagination. It was not all bluster. It was not all tariff related. There are macro global issues. So keep your eye on that ball. So how are we going to trade this? What are we going to look for? I've got a couple of stocks. I'm going to show you a search that I ran, and we'll take a look at those results. And so what I'm going to be watching for is show me a stock that's had prior earnings a day ago or 25 days ago. I kind of want to see stocks that have already had that news out there with a slightly negative market reaction. And if I take a look at these stocks, I'd like to see the stock below a VWAP-E. I'd like to see some relative weakness on a 30-minute and a daily basis. So even when the market is doing this, up over 400 points in the last week from its low, I want a stock that's been really struggling to advance after reporting earnings. And so these will be some good candidates for me to take a look at. And let's see, I can also take off these two because we're below AVWAP-E. That tells me that the reaction is negative. And so now I'm going to take a look at these stocks in here. And there's one in particular that I want to take a look at, and it's IBM. GILD looked pretty good as well. So IBM, here's what the stock did. It gapped down after earnings after the close. That's the first time that it trades. Yes, it's been able to grind higher, and it barely got into its D1 gap here. So not able to move with the market very well. Put on our SPY overlay. Here's what the market did. Look at that rally that we had in the market, and the stock has actually been selling off. So there's your market move, the gray line. Here's what the stock has done, exactly the opposite. During a big move on Thursday and Friday, this stock was barely able to get back to its gap. That tells me that there's still selling pressure. There's still relative weakness. Take a look at the daily chart. Let's take the overlay off. And you can see it bounced off the 200-day moving average, but it's struggling to try and fill in this gap. So what is the pattern that I'm going to be looking for? Pete, are you going to be shorting IBM on the open on Monday? No, I'm not going to do that. Why would I do that when the market has put in such a strong showing? As the market continues to float higher, what do I want to see IBM do? I want to see it preserve this gap. Sure, it can go into it a little bit, but I'd like to see half of that gap preserved. If it can't even get back to the 100-day moving average, that tells me that there is selling pressure on this stock. Even with a strong market backdrop, this stock has sellers. When I see that resistance and when I see that inability to get through that 240 resistance level, I'm going to feel very comfortable taking a short position in IBM because I know, blam, after earnings, they sold it off and they hit it hard. Revenues were down for IBM year over year, and they see less government contracts coming in the future. Is there any certainty behind that? Yes, for sure. Trump is definitely cutting government spending. So tariffs this or tariffs that. Cutting government spending is a definite. That is a for sure. Is that going to impact IBM? Yes, more than likely. So that news is going to weigh on the stock. And we also had Google with a fairly wimpy reaction. Initially, it was up, but you can see how on Friday, the stock retraced off of that 50-day moving average, and it really wasn't able to participate with that market rally. And you can see here that the stock gapped higher and it sold off the entire day. Does that mean I'm shorting it right now? No. There's what the market did. Grind, grind, grind higher. There's what the stock did. Drift, drift, drift lower. So ideally, if you've got a stock that gaps up after earnings and the market is strong, tick, tick, tick higher, 45-degree angle, rallies the whole day. That tells you buyers are there. Not in this case. They're like, that gapped up a little bit further. We're actually kind of bearish on it. Even with the market moving higher, we're in there selling Google. So I think Google could be another one, but out of the two stocks, and because Google's only had one day to react to earnings, I'm going to be favoring IBM. I think IBM is going to be a better play, but it'll be the same thing with Google. When the market is in go-go rally mode, what do I want to see these two stocks do? Struggle, struggle, struggle. Relative weakness, that is a sign of selling pressure. And that's how I would be playing any rally that we see over the course of the next 10 days or so. I'm going to be watching for these stocks that have already been weak, have really had a hard time bouncing off of that support, and that are firmly below resistance levels. And if the market starts to struggle and it can't advance any higher, these are going to be your first stocks that roll over and head south. Before I conclude today's video, I'm doing a lot of short videos. And you know I do my Wednesday morning short. I'm actually going to be doing these shorts about an hour after the open. I tried to do them before the open where I would outline the most likely scenario that was going to play out and how you would trade it. There's not much value in that because it's kind of like playing chess. When you sit down at the chessboard, you don't know how your opponent is going to open up. But after about 10 moves or so, you're able to analyze what your position is versus their position, and you're able to put your game plan together and say, okay, here's how we're going to be approaching the session. But for right now, before the open, you really don't know what's going to actually play out, especially when we have this level of market volatility. So after an hour, I'm going to paint the picture. I'm going to tell you what's setting up. I'm going to show you where the opportunities are. I'm going to try and do that within about a 3-minute time frame or less. And then I'll do a review later in the afternoon. Here's how things actually played out. Here were some of the tells during the course of the day. If you're looking how to read price action, if you're trying to learn how to trade, these short videos are going to be really, really helpful for you because They're going to give you real-time information. Here's what I'm expecting to do based on what I've seen. Here's what I've seen, and then a recap towards the end of the day. So please make sure that you turn on your notifications. By all means, subscribe to the YouTube channel. Thank you so much for sharing these videos with other traders. I'm reaching a larger audience, and that really is my goal. Thanks for watching. Trade well. We will see you next week.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.